Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your metals market update, and this is for Thursday, the 1st of June, 2017. I'm at 2:35. I waited a half an hour for the President to speak on the climate accord, and I've given up. I want to get these tapes out, and I'll just go back and see what he had to say. Looking at the market, I'm not seeing any big reactions if he's talking right now. I'm in the studio, so I don't know. I like the action in the metals. They broke. They held where they had to, and they kept their embedded readings. The stock market, no quarter if you're trying to be short this market. It just continues to run to new highs. And if we take a look here at the bonds and notes, tomorrow we get the all-important jobs data. This market's not breaking very much. The market seems to be saying, even if the jobs data is strong, so much daily economic data coming out that is wishy-washy, this could be a one-off event, and be it September, I don't know. That's where the odds are. December, I don't know. We'll see how the economic data plays out as we go forward. But in the gold market, longer-term charts, which are the weekly, have the higher lows, higher highs, and the market is staying at this point at least over the 18-week average of closes and certainly over the 100-week. That's bullish. When we go to a daily area chart of closes, you can see how you've gone up, and today you're down, from the looks of it, down about $5 at this point. Okay, but the market hasn't broken through any key areas, and we've had an inside trading day today, and so far the market's staying near the higher part of the day, but it is underneath the opener, and a lot of traders use that, and if you're a candlestick trader, you put importance on those type of days. When you're looking at August swing lines, you can see on the swing line that you got higher lows, higher highs. That's bullish until this low, 1256.20, is violated. You're also over the 200-day average. That's right here in the gray. You're over the 18 and you're over the 100. Now, could we get another crossover where the short-term average gets over that 200? We could, and that would be important. But I'll give you the big daddy if it happens. Getting the 100 back over the 200 and the 18 over both, you're going to the upside at that point in terms of moving average theory. Obviously, it hasn't occurred, so we have to wait to see what happens. When we come to Bollinger Bands, should the market decide to leapfrog to the upside, 1285.80 is a potential target. Support's back down here in the 1254.50 level, and you now have an embedded reading. That embedded reading means that the pullbacks in the market should be well supported, and we saw that today. As the market got down to 1263.70, as you can see here, it's come back about $7 off of that. Not bad action. Certainly not new highs, but not bad action. ETF gold, embedded reading, tried to break today, got as low as 1206, did not take out this number, and now you're suddenly higher on it. If it can extend, what's wrong with the 121.80 level? Absolutely nothing. GDX, look at the battleground. 18-day average of closes. That so often is what happens in these markets. Momentum here is still pointing down, and prices hanging right here. It's not divergence yet. Divergence would be if the market got up tomorrow and you kept pointing down in the slow stochastics. This is the weak sister so far of that complex. In the gold-silver ratio, August gold is now gaining nicely on the silver, so right back to the upside. You're back into that up thrust, and that you're just extending it now to 73.39. Then we get to the silver, which tried a big break today. It did get under this previous low, came back, and here you are within striking distance of the high by 7 cents. But I'll tell you, when the market got down under 17, the slow stochastic study had turned on and it came right back. That's why so often you got to wait and see what it does to later in the session. Market finished around 17.28 as a settlement today, so that's going to look pretty good on the chart still. The copper market sort of stalled right here. Why not? You're still seeing reasonable growth out of China. The question is, you don't have a trend. You've got a lower low and a higher high and momentum that's gone flat in an overbought area. I don't see anything you can get bullish on basis that, all right? Could you get bearish on this? You could if you took out 250, 390. That would likely turn the slow stochastic down. As long as you didn't take out 261.95, you'd end up with lower highs, lower lows under the 18-day average. So the setup, the what-if scenario could be to the downside. There's nothing to the upside that would say, hey, get involved from the bull side. In the platinum market, I've mentioned to you the unwinding of the long platinum, short palladium that's been going on for days. It went on further today. Momentum is finally getting to the point where it's no longer left in overbought condition. And once again, the 18-day average, that pivot point, that line in the sand, is holding this market as the palladium just soars to the upside. And I pointed out to you yesterday that a market, if it extended, the upper Bollinger Band was the likely target. I'll stick with my ideas there. They're not too bad at all. Trend still up in this market, by the way. In the dollar index, okay, we're up a bit today. The market's looking for the jobs data in the morning. What does it mean? How strong is the data? Is it going to be strong enough to carry to the September time frame in thoughts? Or is it barely strong enough and then the dollar probably reverses down again? This market gets very bearish in the dollar if you take out 96.79.5, and you should say, why? It's because you already have the embedded reading. You have a pattern of a higher high and a lower low. If you did not take out 97.70, I don't care what tomorrow's high is, just don't take that out, then break through this 96.79, you end up with lower highs, lower lows, and an embedded reading under the 18-day average, and there's nothing other than, I can say, bearish in terms of a chart pattern there. So I'm waiting to see just what the president said. I don't know myself at this hour. I'll know it by the financial update, but there's literally no market reaction to it, as I didn't think there would be. If he stays out, if he pulls America out, we probably have 4 years before we're truly out the next election. If he stays in, why would he stay in when he was elected on the premise, at least, that he was going to pull out of it? So it'll be interesting. I think he should have just flipped it back to Congress and said, guys, are we going to stay in this treaty or not? Could have been an interesting play. I don't know where it came out. Modern Trader Magazine, a free one-year subscription. I'll explain. This comes by email to you. This is the syllabus right now that we've got, the menu. Sell CLB, options, WTI, natural gas, the dollar, futures, ETFs, derivatives. Gives you an idea on the current energy story. Then chart patterns are always in there. Then it talks about other cool trading ideas. So I don't care if you're an ETF trader, a futures trader, a stock trader, a derivative, FX. It's all here for you. And then they back it up with a daily publication for you. Call us. Go to our website to sign up for it. You'll see Modern Trader. Click right up here. You can do the same. Or under us on many websites, it says, click here for Ira's free offers. Do it that way. I'm Ira Epstein. You have a great day, and I'll talk to you all later today in my financial market wrap-up.